The 2024 election is full of twists, but is also filled with returns for investors. Vice President Kamala Harris sharpening her pitch to voters with proposals to raise the corporate tax rate and put a ban on price gouging. Meanwhile, former President Donald Trump has made clear his stance on reducing taxes and adding tariffs. Investors are taking the hits from both candidates, hedging their bets in some sectors and bracing for impact in others. The vice presidential nominations of Senator J.D. Vance of Ohio to Trump's ticket and Minnesota Governor Tim Walz to Harris's are adding more wrinkles to the election and shedding some light on the policies and platforms each administration might pursue. Tech, AI, and semiconductors are set to take center stage, regardless of who wins the White House. Generative artificial intelligence has lit up the tech sector, delivering triple-digit gains for US companies like Nvidia. But tech's latest battleground could also become political fodder as investors consider generative AI regulations. Generative AI tech is still in its infancy, with experts calling for government guidelines and laws that give tech companies a clear framework to develop AI. A potential Trump administration would likely enact fewer restrictions and guidelines compared with a potential Harris administration. One analyst theorizes this may be a driving factor behind Elon Musk's endorsement of Trump. The billionaire chief executive of Tesla and social media platform X has promoted the use of AI through its companies, including in Tesla's full self-driving technology, its planned Tesla bot, and Grok AI. Geopolitical tensions around Taiwan are another potential flashpoint for both candidates. Trump's comments that Taiwan should pay the US for protection and, quote, doesn't give us anything, is raising questions about the US's role in the region if Trump were elected. Taiwan is critical to the world's supply of semiconductors, designing and fabricating everything from powerful AI chips to simple automobile switches. The self-governed island holds democratic elections, but remains under threat from China, which claims it as part of its territory and has threatened the use of force to reclaim it. Experts say that while a lack of US support would have disastrous consequences felt worldwide, it's a very unlikely scenario under either potential administration. Semiconductor export bans, meanwhile, are finding traction with both Harris and Trump. As fears over China's prowess in chip-making rise, the US is leaning on such restrictions to preserve its lead in advanced chips, especially those used in developing advanced AI technology. The Trump administration enacted heavy trade restrictions and tariffs on China, bans which were continued under the Biden administration and are likely to continue under a potential Harris administration. However, Trump is likely to take a more aggressive stance, enacting additional restrictions aimed at curbing China's chipmaking. Crypto investors are also speculating which party will be in control after the elections. Former President Trump is looking to generate support among crypto traders with his embrace of Bitcoin and other cryptocurrencies. But the longer-term outlook for crypto is unlikely to change based on the outcome in November. Trump has vowed a strategic reserve of Bitcoin and promised to fire current SEC Chair Gary Gensler, who is pursuing crypto regulations. Democratic reactions to crypto have been more mixed, with Biden's nomination of Gensler leading to enforcement actions against platforms like Coinbase and Binance. But some Democrats are calling for a more crypto-friendly stance, hoping for a reset to the party's approach to crypto through Harris. But crypto's risk-on nature means it's more likely to see the market and interest rates, not politics, influence its pricing. Bitcoin saw dramatic swings in price during August alongside an increase in market volatility. Some market experts are already saying the election is irrelevant to markets and business, no matter who wins. A recent report by John Hancock Investment Management shows the best-performing asset classes during the Trump administration are not what might be expected. Despite Trump's hardline approach to both China and tech companies, information technology earned the highest return of nearly 28% during Trump's administration from November 2016 to November 2020. An index tracking Chinese stocks gained nearly 17% over the same time period. Meanwhile, during the Biden administration from November 2020 until June 2024, the S&P 500 Energy Index gained a whopping 42%. A crude oil index, meanwhile, climbed 36%. All this to say, election-based bets don't always work over extended timeframes. Stocks are typically driven more directly by market cycles, earnings, valuations, and interest rates than by the policies of any one presidency. For long-time market watchers, the elections are just another day in the markets. For Investors Business Daily, this is Mike Zhuang.